The next chapter of AI revolution is intensifying. While Tesla's is about to launch its first Robotaxi on October 10th, the decision to host the event at a Hollywood film studio only amplifies the excitement and curiosity, and will boost even more the excitement around Robotaxi revolution, which could reach its peak in coming weeks. Therefore, now is the perfect time to examine the investment opportunities related to this new AI revolution that could change how people move around the world. In this video, we'll explain, right away, what a robotaxi is, discuss the challenges Tesla will face in the future, and also highlight the advantages Tesla has in the market compared to its competitors. But stay tuned until the end, because we'll share Cathie Wood of ARK Invest's price target for Tesla stock, considering the impact of the robotaxi revolution. The Robotaxi Concept. The concept of ride-hailing networks using autonomous vehicles, commonly known as robotaxis, has long been considered a question of when, not if. The first robotaxis were tested in Singapore as early as 2016, and Elon Musk famously predicted that by 2020, Tesla would have a fleet of 1 million robotaxis, poised to compete with companies like Uber. While progress has been slower than initially expected, recent developments indicate the concept is becoming increasingly viable, and here are 3 highlights. First, pilot fleets, once limited to a few vehicles, now often consist of hundreds. Second, Alphabet's self-driving vehicle developer Waymo said it would begin operating all-day, curbside pickups and drop-offs at Phoenix Sky Harbor International Airport in Arizona. Third, Tesla is finally preparing to unveil its own robotaxi. Now let's dive in the robotaxi revolution investment opportunity. For investors, the robotaxi opportunity is becoming far more tangible than previous technological innovations, with relatively straightforward economics. In the US, Uber charges between $2 to $4 per mile, but robotaxis are expected to charge around $1 per mile, making them highly competitive. A robotaxi driving 50,000 miles annually, roughly 136 miles per day, could generate $50,000 in revenue. Operating costs, including charging, cleaning, maintenance, and insurance, are estimated to be less than 50 cents per mile. This could result in a $25,000 annual profit per vehicle, split between the vehicle owner and the network operator. Initial robotaxi prototypes cost over $150,000, but current models are approaching a production cost of $30,000. Although competition may drive fares down over time, lower prices could lead to higher mileage and broader adoption. Robotaxi services also have the potential to scale rapidly, mirroring the revenue growth seen by Uber over the past decade. This growth could be especially pronounced in high-density urban centers, where car ownership rates are lower, and demand for shared mobility is high. Challenges and safety concerns. The primary challenge facing robotaxis is safety. Although autonomous vehicles are theoretically safer than human-driven cars, gaining the trust of regulators, consumers, and insurers is essential. While sample sizes remain small, early studies, including those by Waymo and Swiss Re, have shown encouraging results. Tesla has taken a unique approach to the robotaxi market, differing from competitors who use a combination of cameras, sensors, and LiDAR, light detection and ranging, within geo-fenced areas. These systems rely on an array of sensors to navigate predefined road networks. In contrast, Tesla's full self-driving, FSD, technology is built solely on camera-based vision, proprietary AI models, and robust computing power. Elon Musk has dismissed LiDAR as expensive and unnecessary. Notably, Tesla placed a modest $2 million order for LiDAR sensors from Luminar in Q1, possibly for testing or validating its existing systems. Although Tesla's FSD has been on the cusp of achieving full autonomy, it is currently rated at Level 2, far from Level 5, which represents full autonomy. Competing services have achieved Level 4 autonomy but are confined to specific zones. Tesla's camera-based approach aims for Level 5, enabling autonomous operation anywhere without relying on predefined roadmaps. Tesla's advantages. Tesla has several strategic advantages in the robotaxi race. Tesla's vehicles have amassed over 1 billion miles of autonomous driving data, significantly more than the just over 10 million miles accumulated by competing platforms. The Dojo supercomputer, used for training Tesla's FSD models, ranks among the most powerful in the world. Tesla has the capacity to manufacture over 2 million vehicles annually, with plans for further expansion. Many existing Tesla vehicles can be upgraded to the latest FSD version. These factors create a substantial competitive moat that is challenging for others to replicate. Tesla's Robotaxi service could explore several business models. Some analysts propose that Tesla might initially operate its own fleet of vehicles and later allow third-party operators to run their own fleets. Other options include enabling individual Tesla owners to contribute their vehicles to the Robotaxi network or licensing the technology to other automakers. For investors, the key takeaway from Tesla's Robotaxi strategy may not be the vehicle itself but how the company maneuvers its overall business strategy. In the Robotaxi market, where most players are either tech giants from the US and China or unlisted startups, Tesla stands out as the most accessible stock with direct exposure to this emerging sector. What technology does Tesla need to improve before going all in on the Robotaxi business? Tesla's business strategy is growing increasingly complex, and the company must now decide which areas to prioritize. A focus on robotaxis could mean that other segments receive less attention, but this market presents substantial growth opportunities that could drive Tesla's future success. To prioritize the robotaxi market, Tesla must first accelerate its investments in full self-driving (FSD) technology development and monetization. FSD is critical to Tesla's robotaxi ambitions and has the potential to become a major recurring revenue source through subscriptions, software updates, and licensing deals. Enhancing FSD's capabilities would set Tesla apart in the competitive EV market and pave the way for autonomous ride-hailing. Therefore, Tesla will need to focus on these three objectives. 1. Continue improving FSD software with frequent updates and expand beta access to more regions. 2. Address regulatory and safety challenges by collaborating closely with regulators to gain full autonomy approvals. 3. Explore monetization opportunities, including offering FSD subscriptions to non-Tesla vehicles through partnerships or licensing arrangements. These steps will be essential for Tesla to realize the full potential of its robotaxi strategy. Why should Tesla prioritize on robotaxi business? Robotaxis has the potential to significantly boost Tesla's growth through various strategic, financial, and operational benefits. Here are 9 main ways Tesla will highly benefit if prioritizes the robotaxis business. 1. High-margin revenue stream. Robotaxis represents a shift from a one-time vehicle sale model to a recurring revenue model. Unlike traditional car sales, where Tesla generates revenue only once per vehicle, Robotaxis creates ongoing income through ride-hailing fees. These services could have much higher margins compared to car sales, especially once initial costs like vehicle production and software development are amortized over time. 2. Scalability and market penetration. Once the technology and regulatory hurdles are cleared, Robotaxis can be deployed rapidly in high-demand urban areas. This scalability allows Tesla to penetrate markets that are traditionally challenging for automakers, such as ride-hailing and transportation services. This expansion could lead to Tesla capturing significant market share in the broader mobility market, estimated to be worth trillions of dollars globally. 3. Massive addressable market. The global ride-hailing market is projected to grow substantially in the coming years, with estimates reaching hundreds of billions of dollars annually. By entering this space, Tesla can tap into a vast new market beyond traditional car buyers, including urban dwellers who don't own vehicles, commuters, and tourists. This would create a new and extensive customer base for Tesla. 4. Leverage existing vehicle fleet. Tesla already has a large number of vehicles on the road equipped with the hardware needed for full self-driving, FSD. Many of these vehicles could be upgraded via software updates to function as robotaxis, allowing Tesla to rapidly scale the service without the need for a massive new capital investment in vehicles. 5. Reduced cost per mile. Robotaxis have the potential to offer rides at a lower cost per mile than traditional ride-hailing services like Uber and Lyft, due to lower operating costs, no driver salaries, optimized routes, efficient electric vehicle operation. This cost advantage can attract a larger volume of riders, driving higher utilization rates and increasing revenue per vehicle. 6. Increased brand loyalty and ecosystem expansion. Tesla's entry into the robotaxi market could deepen customer engagement and brand loyalty. Owners of Tesla vehicles may have the opportunity to include their cars in Tesla's robotaxi fleet, earning passive income. This concept of shared ownership could drive more consumers to purchase Tesla vehicles, knowing they have the option to offset costs by participating in the ride-hailing network. 7. Data and AI advantages. Tesla's fleet of robotaxis would generate vast amounts of data on driving patterns, road conditions, and passenger behaviors, feeding back into Tesla's AI models and improving FSD performance. This data loop would enhance Tesla's autonomous driving capabilities, keeping it ahead of competitors and continuously improving safety and efficiency. 8. Contribution to sustainability goals. Robotaxis aligns with Tesla's mission to accelerate the world's transition to sustainable energy. By promoting shared electric mobility, Tesla can reduce the number of vehicles on the road, lower emissions, and contribute to more sustainable urban transportation systems, enhancing its brand image and attracting environmentally conscious customers. 9. Potential to transform Tesla into a mobility company. By venturing into the robotaxi space, Tesla could evolve from being just a car manufacturer into a comprehensive mobility company. This transformation could unlock entirely new business opportunities, positioning Tesla not just as an automaker, but as a leader in autonomous transportation, with services that extend beyond personal car ownership. In summary, Robotaxis has the potential to revolutionize Tesla's business model, driving substantial revenue growth, higher margins, and expanded market presence. If successful, this venture could elevate Tesla's valuation, positioning it as a dominant player not only in the automotive industry but in the future of global transportation. Additionally, considering that Robotaxis is a close reality, ARK Invest has a 2029 price target of $2,600 for Tesla, with a range of $2,000 to $3,100. Applying a 9% discount rate, that translates to a present value of $1,300 to $2,014. ARK Invest has a highly optimistic valuation hinges on the assumption that Tesla will prioritize Robotaxis, the segment with the highest potential margins. ARK's base case suggests that by 2029, Robotaxis could contribute 63% of revenue and 86% of EBITDA. Even in ARK's bear case, Robotaxis is expected to generate $600 billion in revenue by 2029, a significant leap for a business starting from zero. Only time will tell, but we should never doubt Elon Musk's potential, so, anything is possible. Don't miss out the next video above. Thanks for watching, good luck and good profit, by Edward Cash Trader. Please read the disclaimer in the description below. You can also support the channel by subscribing and turning on notifications. Let's grow the channel together.